Hello friends, Buffy the Racer here. I hope you had an enjoyable holiday last week. I know I did, but we're back with the first episode of the December Weekly Market Insight series, which is coming directly from the Capital Markets Trading Desk right here at SunWest Mortgage Company. It was a buzzing week, yet full of optimism. So, this week's Fed Chair Jerome Powell remarks confirmed expectations that the Federal Reserve will raise interest rates by 50 basis points this month and will take a departure from a series of 75 basis point hikes. He seemed to be optimistic on the stance that the inflation could be contained without the U.S. economy tipping into recession, but said borrowing costs would still need to keep rising and remain restrictive for some time. His remarks came out just before the moment when the Fed officials were preparing to enter their blackout period ahead of the December 13th-14th meeting. Supposedly, Fed Chair Jerome Powell said pretty much what the markets wanted to hear, and Wednesday being the last day of the previous month, traders decided to take stocks exceptionally high. The global stocks climbed to a new record, and the buoyant mood knocked the dollar lower against its group of 10 counterparts, while Treasury 10-year yield stayed at 2-month lows after Powell's comments. The yen advanced more than 1%, and the euro touched a 5-month peak. Meanwhile, the sentiment in Asia got an extra boost after reports indicated fresh signs of a softening in China's COVID stance. Yes, you heard it right. Exactly 3 years since the discovery of the first coronavirus patient in China, for which the country decided to fight back, is finally pivoting away from efforts to squash the pandemic completely and focus more on its economic impact. So what else is brewing in the market? Well, let me tell you. West Texas Intermediate trading at $82 a barrel after the reports came out that the 23-nation alliance, OPEC, is expected to keep the oil supplies unchanged when it hosts discussions on December 4th to calibrate production for January. Meanwhile, hiring at U.S. companies cooled in November to the slowest pace in nearly 2 years, and wage gains moderated, suggesting employers may be starting to hit the brakes amid a darkening economic outlook. Businesses' payrolls rose 127,000, the smallest gain since January 2021. Applications for unemployment benefits fell while continuing claims rose to the highest since February, suggesting that Americans who are losing their jobs are having more trouble finding a new one in a labor market that's gradually cooling. Continuing claims rose by 57,000 to 1.6 million in the week ending November 19th, the biggest jump in a year. Initial unemployment claims decreased by 16,000 to 225,000 in the week ending November 26th. According to the Commerce Department data published Thursday, a measure of U.S. inflation flagged by Federal Reserve Chair Jerome Powell as perhaps the most important guide to the inflation posted a slowdown last month. The Personal Consumption Expenditures Price Index, excluding food and energy, rose 0.2% from a month earlier and an annualized 4.6% in the third quarter. Prices of services, excluding housing and energy services, rose 0.3% in October, the smallest increase in 3 months. The inflation and interest rate hikes continue to pressure consumer confidence. The Conference Board's Consumer Confidence Index fell to 100.2 in November from 102.2 in October. In the same period a year ago, the Consumer Confidence Index stood at around 112. Moving ahead, the U.S. manufacturing contracted in November for the first time since May 2020 as output weakened in the face of a third straight month of shrinking orders. The Institute for Supply Management's gauge of factory activity slid to 49 from 50.2 in the prior month. Now, let me update you on the housing market, shall I? Well, I will. The U.S. housing market pulled back even more in September, with prices slipping 1.2% from a month earlier. As per a report, it was the third straight decline for the seasonally adjusted measure of prices in 20 large U.S. cities. The MBA's Mortgage Purchase Index increased 3.8%, the fourth straight gain, to the highest level since the period ending September 23. However, refinancing activity dropped 13%. MBA's overall measure of mortgage applications declined 0.8%. Let me wrap it up for ya. The markets we know are always mysterious, unpredictable, and volatile. So let's see how they would react in the long run and how policymakers would take forward this complicated task of policy tightening. So that's all we have for this week, guys. Please join me again next week. As usual, stay updated with our news, and our trading desk will keep you informed with pricing incentives. Happy Friday, everyone. Have a great weekend. Buffy, I'm out.